CMH on the TS exchange. All right, CMH. Oh, it's gonna be a tough one to pronounce. Carmanah, with an H at the end. Technologies Corp. And check this little beauty out. Ooh. Stage 4, stage 1, stage 2, stage 3, stage 4, stage 1. All this being on monthly candles, but we're not doing stage analysis on monthly candles. I'm just doing my regular trading framework and defining, seeing if I have a breakout, see if I have the wind in my sales on the weekly chart. So let's go and do this. Create my black space all around. Start by setting my support resistance. And oh, look at that. Monthly candles, guys. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like 1 year, 2 years, bottom pattern. It's powerful. You even have a closer one right here. Patterns within patterns. This is awesome when you have a launching pattern. 1, 2, 3, 4, 5, 6 months. 5, 6 months. Launching pattern on always testing that resistance line, testing, and then boo, explode. So that 470 level, we went right through it last week. We had a close at 495. No upper wick. That means if you don't have a wick on top, you didn't have a pullback on the smaller time frames to look at. So that's pretty nice. What I'd like to do is have that monthly candle close to confirm that, because you never know. See how high we are here, how high it was back here? Well, that could end up being just a small green body or red candle going down with a long wick. Could just end up like that. So yeah, it happens. Somebody could have thought it was a breakout here during the month. Was green up to here, right, for that wick to be there, and then price action got sucked back down. But right now it's looking pretty good for CMH. With no further ado, let's go and see what's happening on the 5-year weekly. What do we have? Ooh. Oh no, wait, sorry. Oh, okay, here I am. All right, let's start by zooming in. Yeah, Ichimoku cloud under the red cloud, downtrend. That's resistance. Above the green cloud, uptrend. There's no resistance here anymore. No Ichimoku defined resistance. The monthly, you see it's at 470. The weekly defined, the last specs of weekly defined resistance at 477. Just a little bit of noise on top of that monthly candle. Defined resistance. And above the 30-week moving average, launching pattern. Right above here. So here's the thing. When did the breakout happen? RSI going over halfway territory. I look at these candles here to know when the breakout happened. Because right now, let's remove even more some of those. There you go. This candle doesn't have the volume necessary for it to confirm breakout. Neither did this one. Look at that, the volume. That's, well, okay, this might be skewing. Let's zoom in even more. Okay, there you go. Let's concentrate here. This is not twice the average of the previous 4 weeks, 4 to 5 weeks. This one neither. Could the breakout have happened here on this candle right here? Can't get in. Okay, here it is. Could the breakout have happened right here at the 450 level on this candle? Well, The RSI was going up through the halfway point, going upwards. Remember, it's on the Mansfield as Stan uses. I use RSI because that's all I have. My trading software does not permit me to have the Mansfield. It still gives me a good idea of the strength of the stock against itself, its own action. The Mansfield is the strength of the stock versus its index it's in. And let's go look at this arrow here, right here. See when I highlight, you see it here and here. So without getting, let's remove the their candle. Let's make like they didn't act. Okay, let's say I would have had an alert. I would have been monitoring this around these levels back here. And then I say, oh, look, green candle, nice. This one is this is definitely more than twice the average of the previous 4 or 5 weeks. 4 weeks. 1, 2, 3, 4. This candle's volume kind of skews it. Here we're close to 100,000. Here 150, and these little specks. So if you had 150 plus 25 plus 20, maybe 175 divided by 4, and that gives me roughly 43. So if I have 90 here, I'm technically above twice the average. But usually you don't see it like that with this type of action. You see it crescendo going up, and then after that the breakout candle. But technically this could be the breakout candle right here. And what happened after that? Let's see for the selfie. Red candle, pullback below the breakout line on very low volume, 1,677. And then green candle going back up, so it's already pulling back up with increasing volume. And here we are today. Breakout, pullback. You had a chance here or here, and continuation right there. The volume's kind of low, doesn't seem to be super duper liquid, except when that breakout candle happened. 50,000, not a lot. But it's looking good. So the breakout was actually right back here. So is it too late to enter? No. Remember, we're still waiting for that monthly candle close to make sure that this price action in the next few days doesn't get sucked back in, and it could. And if it goes back in with contracting volume, then it's like this, goes up, down, and that's why, guys, you're not. I'm gonna use the words bear and bull, but people, you're bull, and when there's a pullback, you were wrong, or vice versa. Like, that's way too much emotional attached to that. There's way too much. It doesn't make sense. The price action isn't going up in a straight line. You shouldn't say you were wrong because the price action went back. There was a pullback. It's like, if you're only wrong or right if you respect your protocol, your framework, your risk money management. You're wrong if you didn't respect your money management protocols and you decide to do an emotional decision or be greedy and set yourself stops not according to your protocol. That's when you're wrong. You're always right if you respect your trading framework. Your trading framework, effective or not, that's a different thing. But if you have risk, never lose more than 1% of your NAV, you'll have a chance to learn from your mistakes. If you risk more than that, then you'll have less chances of learning from your mistakes to fine-tune your trading framework. Because your trading framework, look, what really helps is reading books, reading Stan Weinstein's Secrets Profiting Bull and Bear Markets, reading Peter Brandt's books, reading all these books. You could inherit already solid trading frameworks from these veterans of the game, And then you could spin off and adapt it according to your preferences. But already you have the base. You have the money management. They'll tell you how to enter. They'll tell you how to exit. And they'll teach you those fundamentals about that risk and money management and emotion management also. They talk a lot about emotions in there. That's how you start. If you're just starting and you go on Twitter and it's going to the moon, and like back in the days it wasn't Twitter, it was bulletin boards and forums on penny stocks. That is one recipe for disaster. You'll get upset. You won't be able to sleep at night. You'll vent on people online. Not constructive. And even the mentors online, they can't teach you everything with tweets, and they can't do it. You have to buy the book. You have to read it, apply it, get some experience, and reread it. And never lose more than 1% of your NAV per trade. And then you'll be able to learn. God, if I didn't have those rules, I probably would have wiped out my NAV a long time ago. And I'm lucky I didn't in my beginnings. All right. So here we go. It's gonna be if there's a pullback on low volume, then you could re-enter here, and hopefully that candle close that we saw on the monthly closes above 470, and on the weekly 477. So if there's a pullback and it goes back up for the next 2 weeks, then you have that monthly candle close, and then you know that you have the win in your sales for a continuation from there. Stan, remember, always says there's 40 to 50% move even before he gets in, because he wants that 30-week moving average kind of flat. It's like, it's risky, right? Flat, it's closer to going down. But if it starts going up already, then you have the momentum, even on the weekly. So you want that. And hopefully you get some more volume on the volume is going to be able to tell you the health of the stock. Pullback, low volume, increasing volume on the move up. Practice expecting, practice doing that. This little exercise is what you're looking at. It's really helping me, and it should help you if you know what you're looking at and what you're looking for, to be able to act appropriately without landing on emotional landmines and second guessing yourself. All right, guys, CMH, I'm keeping that chart open a few more weeks, and this looks like a solid stage 2 breakout confirmed by the monthly candle. Awesome. See ya.